Hello guys, this is fairbinaryoptions.com. So let's try to write on the screen here, somewhere here, that this is fairbinaryoptions.com, and this is the euro US dollar. And I would like to make here something that we didn't do so far here on the website. I would like to establish a trading plan for the euro US dollar, or how to trade the euro US dollar next week, in the sense that this whole move from these highs and to these lows, I would say it is corrective. And if you mark these levels, one from the level, or this level here, like this, and then this level here, this move normally should contain the price action for quite some time from this moment on. That being the case, I would like first of all to take a Fibonacci retracement from these highs to these lows here, and to look at the levels there, like this. So these are the levels, and of course to mark those levels, let's mark the 61.8, then of course mark the 50% retracement, and to mark the 38.2. Now, funny enough, coincidence or not, they all represent a possible, except for the 61.8 of course, but they represent let's say a target for the downside, support on the downside when the move came all the way here, or resistance to the upside. In terms of Elliott waves, I would suspect that this is being called a triple combination, with this being an A, B, C to the downside in a form of a zigzag. So let's say that this is wave A, let's make it with red, so let's say this is wave A, and the B, and the C wave, A, B, C, all the way the move to the downside, and it goes, as you can see, into the 50% retracement. But we have this information with 50% retracement only after the whole move has been completed. So A, B, C, X wave, a connecting X wave or an intervening X wave, or whatever you want to call it. Then another wave A to the downside, like this, in the form of a three-wave structure. Then another B wave here that retraces more than 61.8. Then a C wave to the downside, and the C wave to the downside ends all the way here with this, from my point of view, falling wedge here. So A, B, C, the second correction. Now the third correction is quite an interesting one, because initially it looked like a triangle. I don't think it's a triangle. This one here has all the chances in the world to be, that ended with this level here, to be a so-called double 3 combination, and of a lower degree should be labeled like this. Wave A, of a lower degree we said, let's make it with blue, so this to be wave A, and the B wave, like this, and the B wave like this. So A, B, C, the X wave, and this is a correction with a strong X wave that goes more than 61.8, and then another A, and the B, and the C wave, of course. This is being called a double 3 correction, A, B, C, and ends the X wave. Now, after such a situation, normally we should look for the third corrective wave. So we have the first correction here, the second correction here, and we need to see the third corrective wave. I would say that the third corrective wave is not this one to the downside here. It needs to be a bit more complex. It needs to be a bit more time consuming. So I'm suspecting here in this area, I'm suspecting something like a triangle to be formed, okay, and to take quite some time, maybe a week, maybe even 2 weeks. We don't know that. What we do know is that we would like to buy call options every time price goes below this area here. So this is the all important 3580 area, and so this to be A like this. Probably the B wave is not done here. Let's say maybe the B wave will be done around here. So this to be A, and then a B wave like this, and then a C wave, and so on. So for this week, I would like to buy call options every time price goes into this area here. So to have something like a dip to the downside, then like this, and this to be the B wave only. So this to be wave A, like this, and this to be the B wave to the upside. So on a spike here higher. Now, if price is not coming here into this area to buy call options this week, but for whatever the reason goes and into the 38.2, and this 38.2 goes 36.90, I would like to sell it here at this level. In the upcoming week, chances are price will end in this area. So if it dips 35.80, we'll buy call options. If it goes 38.80, we'll buy put options. Expiration date, end of week expiration date. Expecting here contracting triangle. That's the plan. Let's write on the screen. So number one, or the first step to do here, looking to buy call options on a dip to 135.80, and the second thing, looking to buy put options on a spike to 3690 area. Both of them with end of week expiration date. Thank you very much for being here. This is fairbinaryoptions.com. We've just established a trading plan for the Euro US dollar for next week. All these analyses and recommendations are possible due to the help of our sponsor, Lion Eye. Bye bye.